And this is demonstrating what happens with gold prices when we enter a rate cutting cycle that ultimately takes us down to zero. What you're going to notice, the average growth since 2000 in rate cutting cycles in the price of gold is 145%, right? The thing I want to emphasize here, this rate cutting cycle, we're barely 60 days into this. We've just begun. So to anyone thinking you're missing the boat because of, where gold is right now, it's far from the truth. We're just beginning this next phase and in the middle of this rate cut cycle. But since we've seen gold do this performance, what's the story for silver in the same situation? This chart here actually comes from Peter Krauth, an analyst in silver I mentioned earlier in the presentation. And what it demonstrates is the three major interest rate cutting cycles that have been experienced since the year 2000. And what you'll notice, the average gain in silver in a rate cutting cycle, 413%. The most recent one was seen at 250% in that window post-COVID where we had rates slashed to zero. So moving on, aside from gold and silver just being gold and silver, the reason gold and silver are moving up is the same reason all commodities are moving up. We are in a cheap money phase. That's the whole policy coming from this Trump administration and the Make America Great Again plan. And the significance about this is cheap money, anti-dollar policy means we have commodity supercycle. We've seen two before in total, since 1900, there's only been two prior commodity supercycles. We're in the middle of one right now. And so what you'll see is from 1971 to 1980, right? This was the end of Bretton Woods in 71, which was a gold exchange system. We saw from valley to peak 792% average gain in commodities. The biggest gains being both in gold and silver. And then again in the early 2000s, more specifically 2006 to 2011, we saw 660% from valley to peak. And so if we look at the current super cycle we're in, right, we know this is a super cycle we entered midway through the year in 2020. We are far, far from there. In fact, we're not even halfway there yet. And so I wanted to use this to illustrate to everybody, it's not just gold and silver going up. All commodities are benefiting from cheap money policy because commodities settle in US dollars. What we're looking at, though, is gold and silver have been and are projected by the banks as the top performing commodities. They're not going up just because they're gold and silver, although their security aspects helps. They're going up as part of a broader commodity market boom.